Welcome to our presentation. Here's Team 4 and we are presenting the topic Fintech Democratization in the Chinese financial market, focused on the payment sector. We will analyze and evaluate the current state and development, guided by the lead question, how has Fintech in the payment sector democratized the Chinese financial market? Camilla will present the models to better grasp Fintech in the Chinese context. Danny will give you insights from analysis of the Chinese payment sector. And Marco will discuss these insights concerning their impact on the Chinese financial market. And finally, we will reflect on these and also look at the factors that fuel China's fintech domination.
So first of all, what is fintech? Fintech is a financial innovation powered by technology with a material effect on the provision of financial services. These types of companies have highly disrupted the traditional banking industry, often providing complementary services. The key differences lay in, first, the level of regulations, as suggested by the graph. Secondly, in the scope. Traditional banking is based on trust and security, while fintech are based on mobile functionality and accessibility. Finally, in the personalization of the services supplied. Fintechs indeed are way more personalized and inclusive. So, not surprisingly, fintech growth drivers are represented by inclusivity, tech innovation, and accessibility. A growth which may be challenged by two factors in particular, which are a stiffening in regulations and a more severe privacy requirements. For the sake of this project, the Chinese financial market has been analyzed since its fintech adoption trend turned out to be very unique, scoring 87% in EY Fintech Adoption Index, given a global average of 64%. Let's have a look at the graph for the financial services opportunity. It highlights two factors which drive the opportunity from fintech in financial services, which are credit card penetration and smartphone penetration, both of which are expected to grow massively in China. Alongside with an already large population, it offers probably the largest market for fintech to thrive. In essence, the graph shows that countries which already have a high credit card penetration make it more difficult for companies to find opportunity in fintech, while the best opportunities lie in the countries where a huge smartphone penetration is provided and where credit cards are not relevant. A good example is China. China has a huge smartphone penetration alongside growing online payment platforms, taking digital wallets to the masses with the aim of increasingly develop value-added products and services they can layer on the top of basic payment services.
So as shown on the first graph, over the past decade, the payment sector in China's fintech revolution has grown by an approximate 80% annual growth rate. Alipay and WeChat in particular have dominated Chinese financial services as a whole, making up about $18 trillion worth of financial activity. Now, drawing your attention to the mobile payment volume graph, it is worth noting the growing opportunity in firms to enter this sector, a sector that both of the companies that we just mentioned have taken full advantage of, with now only Visa and MasterCard leading the way. Furthermore, fintech companies decided to follow trends in smartphone industry rather than the banking industry. As seen in the third graph, the Chinese market for smartphones grew dramatically, and along with that came a boom in smartphone gaming, app development, and other services. Fintech companies saw the banking industry falling behind and took advantage of this gap to revolutionize the payment sector. A pleasant surprise even to the Chinese government, who has greatly benefited from this revolution economically. Now, while companies like Visa and MasterCard and other markets heavily depend on what's considered a swipe fee, the Chinese markets actually seek to avoid these fees to stimulate economic activity. Most fintech companies in the world have swipe fees between 2 and 4%, which is spread between business expenses and the price of goods, essentially affecting the end consumer and the overall willingness to pay. Chinese fintech companies have been known to reduce these fees to about 0.6%, which gave businesses the ability to reduce prices, knowing that they have fewer fees. Also opened up the possibility of lowering prices for a population with a lower GDP. People became motivated to use these fintech services because of the ease to use and the affordability that came along with it. People and businesses could now pay and receive money more quickly among each other, in essence, generating a boom in economic activity. So, what is the simple principle seen here? Where money is more readily available, it is spent. Now, this also led China to funding other ways to further improve this sector, giving ways to the creation of over 200 unicorns. This improved ability to make and receive funds and payments increased business stability and allowed for more risk in trying out new ideas. With this also came a key strength that the Chinese government has in the ability to collect and use data through fintech in its country to determine the next steps in its economic development. While there have not been discussions on how this data should exactly be used, the multitude of data collected has proven to be a key in growing these fintech companies and in China's recent economic boom.
Finally, which are the effects on the Chinese financial market? A huge impact on the payment method, which comprises several factors. However, for the sake of our presentation, we would like to draw our attention to two interesting factors. First, the stay-at-home economy, and secondly, even if it's still under development, the creation of a personal credit score to be used to influence the payment method. Let me better explain. If you know the person's payment, shopping, and social habits, you can make a fairly strong assessment of their credit risk, not only for loans, but also to personalize the payment method according to the customer's risk. Indeed, several brands permit you to pay for shopping in installments. Thanks to the data gathered by the fintech companies, firms will be potentially aware of your credit history and will therefore to be able to customize your payments, such as number of installments, length of the credit, additional fees, and etc. This will lead to a disruption in the payment method and will generate economic activity at a broader base, rather than just through one channel.
As we conclude, we would like to highlight three major factors that fueled the rapid development in China's fintech sector. Firstly, following trends in smartphones led fintech firms to provide a necessary payment revolution in China. The banking system proved to be inefficient in keeping up with financial innovations, giving fintech companies the ability to make the mobile payment sector the preferred choice over physical cards. Secondly, as a previously unregulated sector, fintech firms in China have received a great helping hand from the central government. Because of these firms' contribution to the economy, new broad regulations have provided high tax incentives upwards of 175% for further R&D in the field. Lastly, data use and privacy has drastically improved in China. Because of the massive population, certain laws and regulations have been implemented to aid the government and companies on how to use data while maintaining China's standard privacy policies in order to continue to grow, keep prices low, and make lives everyday payments easy for the Chinese people and their businesses. Thank you.